Yeah, Bitcoin, a quick check-in. Not doing a live stream, just a quick pass by, a little bit of a slap down that would have shaken out a bit of that excess liquidity that was running in on the alt run. So what's going on? Key point that a number of people might have missed, a couple of key points that folks might have missed. One is that this was also a currency-based event. This was a currency-based event too. What was happening, and this is the big value, by the way, of dealing not just with a crypto trader who's new to the crypto realm and is making his name in crypto trading. We have a long-standing history of trading in the financial markets. Let's make sure that I've got this on a 2 hour as well. Let's make the top 1 hour. This whole event was basically predicated on more to do with dollar strength than specific Bitcoin weakness. That's not to say Bitcoin was super strong. That wouldn't be accurate. But let's just lining up. What have I got up top here? I've got let's stretch this one out a bit. I've got Bitcoin at the top there, and I've got below, I've got the dollar index. So here we go. We're getting the numbers 10 under 10. And we're trying to line these days up a little better than I've done so far. Let's get it almost there. I don't know why. It would be a really useful tool, by the way, if TradingView did this. I think somebody even said once that they do get the days under each other. So we're comparing here what went down on Bitcoin versus, and I'm going to just switch the eye off there just so that you have a clean view chart on a couple of alerts there on either side, watching Bitcoin, what it's doing. This is what happened. Simply put, on the date of the 10th, the beginning of the 10th, you actually were, everything was hunky-dory. Bitcoin was roughly there. Then the dollar started to move slowly up. Here you see him. Here you see him. Up he comes. Because it's the dollar, we'll stay with little pippy blue. Dot. That was okay-ish. You were having a slight down for Bitcoin. It actually got a little bump on the schizo moment where you went down on the dollar first to here. And Bitcoin actually got a little bump over there. But from the candle over here, basically somewhere between 12 midday and the following day, so noon of the 10th, around about, I would say 3 o'clock maybe, US Open, quite for my time ish, going US Open, you can see at a big stretchy candle coming into play with follow through. So all of this up, and what did you get? You got down under the Bitcoin into the worst part of the hit. Literally ended at the day of the 11th. That's interesting. That alert just pinged just to say, hey, we're watching Bitcoin. Use your alerts, by the way. So many people don't use them. So you got a little dot. You can see this is absolutely inverse correlated. Now what you're actually getting now is you got a channel on the dollar that's been grinding higher, and that's led to a little bit of a lean on Bitcoin. See, Bitcoin largely grinding lower in all of this. And look, it could even be, it could have a second rate spiller, and you could in fact get the dollar going up. But this also possibly, so all possibilities still remain, but it's more about understanding what happened for some people that think, damn, what happened? Well, you had a super surge in the dollar. And this is something we were highlighting. We said the dollar index is in a macro inverted head and shoulders, and the dollar is going to start dominating. So people forget that Bitcoin is Bitcoin USD. The USD part, when Bitcoin's not super dominant strong, it's quite relevant. If you start to get strength in fiats, and dollar is the god market of fiat, you start to get that strength going into the dollar. They rein back the price of oil in that. They rein back a couple of gases have been slowing down, the energies. They're trying to rein back the obvious inflation trade, which is pointing at the American economy. And one of the ways to do that is to goose the dollar. Talk of taper. We're going to start tapering. We're going to up interest rates. We're going to bring that balance sheet under. Oh, we're going to do surpluses. Yeah. Okay, we all know the nonsense that comes out of those mouths. But this is just to give you a little bit of an idea of how these charts are diametrically opposite to each other, and hence why you needed to watch that. That was point number one. This is a short vid. I'm going to show you point number two to have considered for all of this, and that is the following, and that was your Bitcoin dominance. Bitcoin dominance. So here we come. I'm going to put the eyeball back on and just show you a couple of things in terms of the draws that we have. Bitcoin dominance had a little bit of a run. As you remember, Bitcoin was leading at one point and we had a nice charge. We made a target. So here you go again. There it was. Let's go big. And we had kind of a left shoulder. You had this head and the complex shouldering for your right shoulder. And that was an inverted. That was your head. That was the lowest point there. I don't know why I did such a big draw with the orange down here, but that was the low of the left shoulder. And off you went. You had a little test. You got rain back in. Then you went the second time. Boom, target made. Bit of overperformance. Now, during this alt period run where everyone was feeling so hunky-dory and we're all bragging about our best alts and everybody is a star and the best trader in the world, alt market is running, etc., etc. This was a key return move as well. Back at this 42.75, it's saying 42.76, but we like the round numbers. I'm trying to put it on 42.75. You got a little spikeroo, and that was, again, Bitcoin going down, but less so than the higher beta alts. So key points to have watched for. The fact that we are currency traded as well. Let's show you that dollar index before I finish. This is a micro vid by my long form standard, which many people complain about. But why not do a short one once every blue moon to keep those folk happy? This was essentially what you were trading. And back up to the bigger time frame, this is your inverted head and shoulder on the dollar index showing dollar strength. We have called for dollar strength and said this would reverse in the same way. It's one of the best ways to put a lid on the American debt markets that they have to keep, because rates should need to rise. There's too much debt. The debt needs to devalue. So they've got to pump the dollar so that they can reduce the need to rise rates, because people can't pay the debt on the amount of debt that's been proliferated. So this has around about a 99.74. That would take you back to the inverted funnel. There was the slap in the face and the big downside with a huge overperformance that saw you breaking out there. Those are your points. The point at which you broke this key level of 94.5, you rallied back up to it. This is the touch, and then this is your smaller right shoulder in the red, and that was of course your head with that left shoulder. So this is in fact a triggering for much stronger dollar. People don't like that. They don't understand it. But dollar must fail. Fail against what? Other failing fiats. Unfortunately, with dollar going up, that's going to lead to a slightly bigger headwind. I'll share with you a draw that I put out to my premium community a little earlier. And this is what might prevail. One of the hardest upside patterns is a rising wedge pattern to trade, because you get regular slap downs through that. We may, in fact, get a rising wedge climb, getting up and closer to the 100, and then pop out the top when we have a more sustained spell of dollar weakness. But you've got more of a headwind now on the BTC USD if the dollar is going up in value. The king fiat is pushing back. Remember, we're going to have dollar milkshake man Brent Johnson coming back onto our program next week, which we'll probably look at even doing a live stream on. You should be following the Market Sniper, because if you understand fiats and the global failure of one system and when it's failing and how it might fail, you'll also understand some of the challenges that the crypto markets face. You need to go to themarketsniper.com and book a call if you want, if you think that's valuable and could save you some money. Small question. This is just a scenario cast that I'm asking. You can tell me whether you think it's plausible, but this tricky way in which the market goes up, are we somewhere here at this moment in time with a mini-me fractal before maybe one more push up? Remember, rising wedges, marginally higher highs are a foreboding event for an eventual breakdown, which is what you got with a return move and spiller thriller. In the same way, a falling wedge is actually encouraging for the upside bump. In both this case, note the orange falling wedge and the orange falling wedge there. So if I remove all the draws, falling wedge into eventual rising wedges, into a corrective falling wedge, strongly up. That's the blue line, strongly up, then more graduated up into your first high, then two highs, third possible rising wedge form, and then a bit of an easing before repeating the cycle. We'll see. It's just a guess. It's speculation. It's one of the tougher ways to trade long. When you keep getting marginally higher highs, people chase in, the support and resistance traders chase in at the new highs, and it's deadly. And that's typical to how retail responds, when actually you should trade to the level and you should seek to be buyers, as indeed we were into that falling wedge there. Let's try draw that one more time a little bit better. Into that falling wedge there. And again over there. And I think another next great entry, if we follow this flight path, will be at these levels, while most will be taking out the new highs and buying in there or buying in there and wearing losses to the downside. Anyway, just a couple of thoughts for you on crypto. I'm Market Sniper, the crypto sniper. We watch and trade all markets. We understand that at a more macro level, the failing of one system, the euro coming into trouble, means the inflation of the dollar, and allows the Fed to keep the debt levels despite the pressure on rates, etc. And this could be a headwind for crypto, despite gold and silver actually going up, which were a lot fresher in terms of their bullishness. Oil and Bitcoin had been bullish for far longer. Okay, catch you later next time. Thanks for watching. Book a call, hit the link below. This is the end of your vid. Thanks for checking in, and yeah, occasionally it's nice to do a short form one. We'll catch you next time.